decreases, yes, it loses. So this futures thing was traded by farmers when they plant in let's say January, and they're supposed to harvest it by maybe June, right? They are not sure if they plant 500 seed, they don't know the yield, but they will sell it to you at the future rate, right? So if let's say each corn is 20 naira, right? They will now say, okay, I have 500 seeds. You are the farmer. I come and do the contract with you and say, okay, you have planted 500 seeds, and I'm going to buy it from you at 20 naira. If we get to July and that corn is worth 50 naira, is my luck. That's futures contract. So it helps farmers to sell off their crops. And on the other hand, it helps the other guys to make some profit. So, but on the downside is, if the yield is not good, the guy will lose, Abi. If the yield is not good, he will lose. So that's how it is. Or if there's there maybe for whatever reason, maybe they say, okay, we are no longer we have banned exportation of cocoa. Yes, person will lose. You understand? So that's it. Okay, so now this is asset class. Okay, so asset classes are the area we are very interested in. These are the things that have that intrinsic nature to rise. Anything called an asset must rise. That's why I mean, when I give my seminar, I'd like to extract this particular slide because it's important for people to understand that when you are dealing with the financial market, the basic knowledge you have to understand is that anything that is called a financial market is designed to appreciate. If you are on the lender side of the financial market, you must get an ROI, is it not? So if you involve in anything that has something to do with the financial market, you are naturally designed, or by default you should get something out, except you are on the borrowing side. Okay, so they will rise. All right, and then all of these things are, the different classes, and then these things are channeled into what we call CFDs. So we are able to trade them. All right, but just to go through them, we are very sure what currencies is, and I'm not going to take the time to tell you anything about currency being the largest, being $6.6 trillion, and all those things, right? All you just need to understand is that the liquidity in Forex is so much that you can make a lot of return from it each month, 5%. 3, 4, 5% in a month. So in a year, you should be looking good because you are not a good trader. In stocks, there's a volume. If you're trading Forex and you make 40% in a month, you're a bad trader. In a year, not month, sorry. If you're trading Forex and you make 40% in a year, you're a bad trader because the volume that we're dealing with is what's it called? Stocks is $20-something billion, and Forex is $6 trillion. You don't even have up to one with the stocks. The best stock trader was George Soros, and he made 40% consecutively. So we use him as this thing, but then he had very rigorous routines and a lot of algorithms that was extracting all the best stocks, and he was able to pick petty stocks that were rising, right? So he traded very well and flipped those things very well. So, but then it's just okay as long as all of these things are CFDs. It's just safe for you to trade Forex market. Whatever works in the Forex market usually will work in the stock market and the other places. Okay, and then the way the brokers are today, you can trade in your brokerage platform. All of this. Most brokers allow you to trade both shares, both stocks, everything, even more than what I have on this list. Okay, So, but I believe everything is on this list because I have index here, volatility index, everything is here. So, but there are some things that I've not, some examples are not here, which you find there, but they are all under one of this class. Okay, so that's currencies, and then I've talked about shares. Shares is bringing capital of a company into smaller units so that individuals can buy and become part of that company. That's what shares is. Like Apple, right? When they say, okay, a unit is this amount, right? For example, we say City Forex. We throw an initial public offering. Okay, we become public. Now we now say, okay, our unit share is maybe 500,000. If you have 500,000 naira, you buy 1 unit. If you have 1 million naira, you buy 2 units. If at the end of the month we make a profit of 5%, you will get that unit share on your money. You get it now. You get that unit share on your money. If you buy 10 shares, you get it times 10. You understand? Yeah, that's the way it works. So indices is formed by combining, the best companies. You put them together and then you name them one thing. S&P 500 is the combination of all the best 500 companies in America. So they put them together and then they have a particular asset class. And then people invest their money into these things. All those 500 companies cannot all crash at the same time. So it's designed to appreciate. As a matter of fact, as a trader, you don't short S&P 500. You don't short S&P 500. S&P 500 had a rising wedge that broke to the upside. S&P 500, go and look at it. A lot of people lost their money because they thought it was going to pull back. Of course, when you have a rising wedge, this is the right direction. Is it not? It breaks out to the downside. But it broke up to the upside. Kept on going for many years. Many years. About 10 years. It was going up. And some people were holding short positions. Go to CNBC, they will tell you it's a wedge, it's going to, but it kept on going. Go and look at the chart, you see what I'm saying. Kept on going. And then many of them shut down because it didn't come back. Okay, so that's the intrinsic nature of these things. They rise. They must rise. All right, they must rise. So take note of that. Commodities are Greek. All those things are gold. They are all commodities. All right, and you can trade them on these brokers platforms. Okay, so energy is anything that generates energy. Crude, natural gas, they are under energy. And then cryptocurrency is, of course, the digital currency, and it's different from what we know. Fiat. Okay, cryptocurrency is, we want to be our own government, the government of our own money. That's what cryptocurrency is saying. Cryptocurrency allows you, it gives you room to build your own money without anybody confiscating it. If you have a problem, nobody can trace your money. Because the system is decentralized. There's no authority like CBN or anybody that is looking at the money, right? So you are free. You are free to grow or to do whatever you like. Do you know that? Yeah. Because it will be open. It's decentralized. It will be open. We're going to see it. You send also money to Akwa Ibom State. You send also money to Enugu. You send also money for construction of roof for this. You did this. This is what came in. I don't know if you understand what I'm trying to say. It will be open. That's why they are banning those things.
It's more transparent.
Yes. It's decentralized. That's the nature of cryptocurrency. That's why they are fighting it. The white guys that have sense are adopting it. Yes. So centralized authority, just like CBN, that's what they mean there. And then it provides outlet for personal wealth beyond restriction and confiscation. Okay, which I've said. All right. Now these are the guys that come together to enable us to trade the forex market. Okay, so you have, this is where the broker is, and then this is your broker, and then this is your commercial bank. All right. Now the Oga Patapata is this. You can't go to them, is it not? You can't. So what you do is you pass through either the commercial bank or the broker or Bureau de Change, the Alaji and the rest of them. They have very standard offices. I mean, minus these people you are seeing on the roadside. So there's a Bureau de Change if you want to do heavy transactions. Right? So so this is where we are. We are the ones here, right? We are the ones here. So we want to buy maybe gold or all of those things. For us to do it, we need to create an account. We need to create an account with this broker here. What's the difference between a broker and a normal commercial bank? What's the difference? How do you know that a broker is a broker and is not a bank, a commercial bank? Okay, so I've mentioned certain things already. I told you, it's a broker that allows us to do CFDs, Abi? Yes. So that contract for difference, sometimes it's actually the broker that is taking the other contract. Right? So they are not necessarily giving it to another trader. So they make it open, and then they just hold all those things and hope that someone else will come in and do something else. Right? That's a broker. And then another difference, again, is that, see these guys, when you put in money in a brokerage account is as good as a normal bank. If you open an account with a broker, you register it, fill your name, your address, everything, you snap, put your passport and everything, is it not? And wait for them to verify you. Just the same way you fill a form on a bank. It's the same thing. The bank will give you an app. You can do transfer from that app. That's the same thing the broker will do. Broker will give you an app also. If you deposit 10,000 naira, you see it in your bank account, in your app. If you deposit 10,000 naira with the broker, you will still see it. The difference is that this commercial bank, that 10,000 naira will remain the way it is, I'm assuming, right? If they don't take maintenance fee, it will remain the way it is. But the broker's own has the ability to appreciate or depreciate. Is that okay? So the one in the brokerage account, if you buy gold and gold appreciates, your 10,000 will no longer be 10,000. You will see that it has changed. So that's the difference between broker and normal bank. So you open with a broker to partake in CFDs. Buy, sell, and all of that. Alright? So, and then of course it's the broker that if you buy maybe $100 worth of gold, the broker buys directly with the CBN, is it not? A bigger body. So it brings all those little $100, $50, $1,000, and then buys in bulk from the CBN. Right? So yeah, that's the cycle. Those are the important things on this slide so that we go forward. Alright, so this is an example. This is BTC. You can see what's happening here. Is what? It's rising, is it not? It's a financial asset. If there's one thing you're taking away from this slide or this presentation, it is that as long as it's a financial asset, it will rise. Even though the government says Nigerians cannot do BTC and all of that, we are still doing it. Because it's an asset. It's bound to rise. Ever since the government said stop doing it, it has been rising. Are you aware? It has been rising. Okay, so you have to find a way to have some sort of financial asset. I always say that you cannot be thinking of financial freedom, financial breakthrough, and you have no knowledge about the financial asset. You have no investment in the financial market. You must put money there. Some of them are slow, some of them are fast. I like BTC a lot because BTC, I've literally seen BTC rise. I invested BTC around 2014, 2015, somewhere around here. It was around $500 and something. I can go back and show you the history of that trade. It was little. What I bought that time was, because I was even in school then, what I bought was around about 10,000-15,000 worth of BTC. Right? So I've seen it work. Ever since then, I have had a natural habit of putting money into these financial assets. You are not putting it to harvest it immediately. This is not money that you are, even if you don't use it for yourself, your kids will take advantage of it. So you have to create a channel that allows you to do something like an investment or a participation into the financial markets. If you're looking for some sort of financial breakthrough. And then you have to also know that these things cannot happen overnight. It can't happen one day. It takes time. BTC did not rise immediately. Look at where I was, somewhere around here. And then see how many years it took. As a matter of fact, I even forgot it. I abandoned it. It was one seminar I went for again that now made me say, I put BTC somewhere sometime. Then I logged in and checked it. There were thousands in it. And then ever since, every month, even if it is 5,000 naira, I make sure I put something inside. As a habit. Just so I don't break the habit. Put something in it. Even if it's 500 naira. Right. So that's that. These are expectancies with the financial market. The financial market is not a place where you come and then you think to get started by telling you got to look for capital if you don't have capital. Go and look for capital. Because if you come here and you are looking to double money, you will throw away your risk of ruin will be high and you will lose the money. Increasing your capital and then expecting the natural return. What I have on this is just screenshots of a calculator that brings out what you should make after some time. I always tell you, I say, if you have a normal business, you are an importer or whatever, you go to China, buy goods worth 10 million naira, fill up your store, and you sell them. You are not looking for 30 or 40 million. Are you aware? That person is looking to make around 3 million, 4 million. And then he goes back to China again with 10 million naira. I don't know if you understand what I'm trying to say now. It's only in Forex that people will put $100 or $500 or $200 and they're looking for thousands of dollars. Because the internet said that, hey, see how I made $20,000 in one trade. It's gamble. It's not trading. You can't rely on that to take care of yourself and your needs. It's impossible. You can't. So if you're looking to make money for the long term, you have to find a way to accumulate capital and then do the right thing. Expectancy is what will you make? An average trader, if you type on Google, they will tell you it's 20%. An average Forex trader will make 20% at the end of the month. Now, if you look at the interest rate at 20% per month, it means that the person can make up to 240% at the end of the year. This is an ideal system. We're not saying this is exactly how it is. He can make 15%, he can make 19%, he can make 21%. So when I checked everything, I had 312.6%. And that's because of COVID. And COVID made the market to move a lot. So we had a lot of profit. This person makes 240%, and he started with $100. And then he was adding $100 every month. So he put in $100. Maybe he's doing a job, he's getting around 100,000 or 150. He's able to save, instead of saving in the local bank that is going to use your money. I don't know if you're getting this thing now. That is going to use your money to do something, generate money for themselves. You see how they establish themselves and branches and all these things. It's your money they are using. Right? So instead of putting your money there, if you have a habit of saving $100, By the end of the year, if you make 20% on that account, $100 around 40 something thousand, you should be making around $4,420. $4,400, saving around 40 something thousand every month. You make 20%. By December, you cash about over 2 million naira. That's good for me, and that's realistic. If you take $100 and you are looking to double your $100 to $4,000, you throw the. It's better you put the $100 gradually, and then make a little amount, controlling your risk. Then after some time, making money will take time. Some of us stayed in school for 4 years, came out, did not guarantee that we are going to make money. And then you come to the financial market, you don't have patience. No. It takes time. You think that I'm able to stand like this and talk to you overnight? It took time. It's going to take time. Can't happen like this. So the point I'm trying to make is you have to give it that sacrifice. Give it that is what is due to it. Don't come in with the mindset that you are coming here to double money. It's going to affect you in the long run. I told them, I said, instead of carrying that $100 and putting that $100 in your brokerage account, put it in a prop firm and get a subscription fee. Is it not? Put it in a prop firm. They will give you a subscription fee of a tangible amount that will enable you to trade little percentage correctly and make profit that is going to even supersede the. We did the calculation on BlueFX. If you start your BlueFX account with 25,000 naira, no, with 50,000 naira, they give you $25,000, and they share the profit you make at the end of the month 50-50.
But why are they sharing it 50-50?
Because they gave you a lot of.
Yes, you paid for, you subscribe.
Yes, your subscription is just to say, I'm capable of trading this your money. Give it to me. Yes. So when you now go and start trading it, they protect that money. You can't take a lot size of one standard lot size at once. If you want to even trade Euro USD, you take it 0.5, 0.5. So they protect the money they've given to you. So now that you are saying, okay, I can trade, they are not asking you for track record. Right? They just say, bring this money, and then if you bring this 50K, we know that, okay, for you to bring 50K, it means that you know what you are doing. Right? Actual investor. Investors give us money, right? They give us money, we put it into securities. You are now the security that is generating the ROI. So you will take some part, and then we'll give them some part, and we too will keep some parts. You want to keep everything. All right, so that every other calculation here still re-emphasizes this point that it has to be slow and steady. Even if you're making 10%, you still make some money. Yes.
So, my question is, this money you said something you have money every month.
It's not a must.
It's not a must. Okay, so are we adding to our trading account, or are we adding to a savings account?
No, not your savings.
No, not like, I'm not saying like a normal savings account.
Okay.
I'm just saying like
the first example I talked about is for somebody with small capital, obviously. There are some people that can go in with a lot of money and then they make a certain amount. This is a one year to grow 12 months plan, right? So you can even do 5 years. If you do 5 years on the same conditions, look at them. The mathematics is the same. The only difference here is 5. Even if you're making 10%, because here this person is making 10%. I am serious. You can make 10%. As I don't know, today's date is what? So it's very, very possible for you to make 10% every month. It's very, very possible. So if you do that for 5 years and you have the habit of doing these savings, instead of putting in a bank account, you're going to make some money. 100 and something $1,000, especially putting it in dollars. If you cash it, you're going to, I'm sure dollars is going to keep rising. Yes. So that's part of. I think I still have a lot of slides to share with you. Okay. So this FTMO, this is a young man I told you that sent me. He passed all 4 conditions, and then you can see he has this slide. I still have a couple of things. Okay. So that's supposed to be end part. All right. Because I feel that time is fast spent. We have to stop. Okay.
Can you please just throw more light on it?
Trading reversals.
Yeah.
No, not mean reversion. There are people who are counter trend traders. Now, when the market is in an uptrend, but you are looking to say, oh, this trend is long overdue to reverse, as we have the case with EU and the rest of them, right? So you probably put a trend line here and it breaks. This guy is a reversal trader. Reversal traders have the advantage of catching the trend very early. So if they are lucky, because look at now, let's say this is the market, this is the price. This green under here is just the trend line. So if the market is moving up like this, right? Traders are seeing the market is rising, but they believe that it will reverse. So what the technical analysis is supposed to do for them is to help them know when the turning point will begin. So, and from the information we have, we know that if the market breaks the trend line, if the market, we put a line like this, and then we say that if this green can break through this line, because it didn't break here, it didn't break here, it didn't break here, but now it's broken here. So they say since it's broken here, there's a high chance of this break to, yes, lead to a reversal. So this is a reversal trade, right? And then there are people who, they just want to sell when they feel the market has peaked. They are counter trend traders. They are interested in taking the gains here. So what these guys will do is they are looking for something like an overshoot. When there's an overshoot here, they look to make profit on that little move there.
Lower pips.
Yeah.
Then your standard lot will increase.
A lower pips, yes.
Then what will be the outcome of the take profit?
It doesn't matter as long as it will also increase now. If let's say you are risking and you are taking 200 naira per trade, you now get into a trade that instead of that has a stop loss of, maybe when the stop loss is 10 pips, you use 0.01. No, 0.10. When the stop loss is now 5 pips, you're likely to use 0.20. I don't know if you understand. So your lot size has increased. It doesn't mean that you are wrong. Right? The pips reduced. So the lot size will increase. Now, because that 200 naira is now factored into a smaller distance. So it gives you a higher volume. Now, you go times 2 of that. Once the market gets to 10 pips, you have made 400. In a short time. Meanwhile, if your stop loss was 10 pips, you will be using 0.1. Abi? You'll be using 0.1. And this 0.1, you need 20 pips to achieve 1:2 to make 400. And you're going to be using a smaller lot size. I don't know if you understand what I just explained. So your lot size is proportional in that sense. Meaning that if the lot size is bigger, you go to H4 and you look for a trade on H4, your lot size will definitely be smaller because H4 is big. You now go to 5 minutes. and then look for a trade there, you see that you're using a big lot size because the pips is now small, right? So just make sure that the time frame or wherever you find your setup is where you are taking your target. That's the main thing. Any other question?
So you mentioned futures when you were of such instruments on MT4.
Futures traders, they don't have this the way we have CFDs. If you want to do a futures contract, you have to call the broker, and those facilities are not even here. We don't do futures here. There are people who are futures traders, but then you can now trade futures as CFDs. They call it e-mini. So, but we don't have all those things. And then the Euro USD and all these other guys have really taken all those things away, so that we don't have to even deal with them. And even as we speak now, there's synthetic trading, where the market does not depend on actual Euro USD anymore. It's just synthetic. It's analogous to this. When there's a thing that Chelsea is not playing a match, but you can still go inside that place and bet. Virtual. Thank you. Yes. So there is that synthetic market is a virtual kind of system. So most of these things have replaced the actual thing. Yes. All right. I think that's all. Abi?
Yes.